Hello and welcome. Today is the Monday the 9th of October. We're looking at the DAX, German 40, FDAX in the futures later on, and I've placed the Camarillo breakout pivot points on my 5-minute chart here, and I'm just going to have a quick look at the key areas based on these levels that I'll be looking at today. So down here, 15,030, we've got the previous day's low, so the Friday's low, based on the official cash pricing. So obviously I get that from a data feed, and then I plug it into my indicator, and I basically put the numbers in, and it overlays these levels for me. What I will be looking for is a push down, perhaps to the S1. However, as mentioned previously, because these levels are a bit spread out, it's not the best kind of a trade setup. Something like this, these two levels here were very tight. That could be a better setup. So perhaps the previous day's low we might get down to, and ideally what we're looking for is a push up to the previous day's close. So we closed on the highs on Friday. As you can see, I'll scroll back a little bit. We opened around this area here. Very choppy action, pushed up towards the R2 before falling right down to where that low was for the previous day of this day. Kind of found some buying pressure there, came up to the previous day's high, back down to the low, and then we pushed right up outside the R3. And we didn't really see any rejection from that. Before I go into a bit of a recap of previous trades, I'll be looking to potentially target the gap, particularly if we come down a little bit to the S1 or the previous day's low. Nice sharp spike at the open. The issue at the moment for October is that the London session opens at a different time to the DAX. The London Open or the UK 100 is effectively opening at a different time than the DAX, and I'm not sure if it's creating a bit of change in the markets, but basically there's two times. So you've got the DAX Open, which gives a little bit of volume, but then you've also got the FTSE an hour later, an hour after the DAX opens, just for this month only because of the daylight savings changes, and basically that might be causing a bit of disparity in when the best time to trade is. So at the moment I'm trading the DAX Open and then also the FTSE Open on the DAX. So trading the DAX twice at two different times, 1 hour later after the open for that second trading period. Now we could potentially get up to the R1 or break out long like these levels up here. Particularly the breakout, the R1. I'm just trying to get that to show up properly. So let's say we drop down, we look at the volume footprint and the depth of market, time and sales for an indication of when we might actually start to turn around off these levels. So effectively what I'm doing is looking at these levels, trying to find points based on these levels where I'd like the market to react. And then when the market is active and I'm looking to trade, that's when I am looking at the footprint to say, okay, well, we've had a lot of volume here. We're sort of seeing a bit of rejection based on the footprint and the actual orders coming through, to get an indication that we might be targeting particular levels. So the close, previous day's close is 15,230. Now this is on the CFD. This is the official cash market. What I'm going to show you shortly is the futures, which I'm trading through Apex Trader Funding on Tradovate. And basically it will be different pricing because the futures are looking forward by 3 months and the price is a little bit higher. So the pricing is different, but the way the market is moving is very similar. So I'm going to take you over there shortly after we do a bit more of a recap of what I'm looking for. So once again, hopefully a push down. We might go straight up to this close gap and beyond. And we're looking for rejections around perhaps the S1. Maybe the close, we might see a fade of the close, but more likely up around the R1 or these two levels up here, so the R2 and the breakout long. We do have the price action around this level, which gives it a bit of potential bounce, so at the R1. And we're going to also look at the volumes that have played a part, so not just the pricing, but have there been enough volume traded in these price ranges to make them significant to trade on. A quick overview of the longer term outlay. So we've got the monthly chart. We've had 3 losing months so far. So this month is currently losing, and then 2 months prior we're heading down. We've hit a moving average of 20, so 20 months. That's the moving average. We've tapped it. We're kind of coming back up now. Previous times we've seen 2 months in a row, 2 months in a row down, but no 3 months. Here we go. We have to head back right back to 2020 and 2019. So we had 1, 2, 3, 4 down months in a row. That was through COVID. Crazy time. But then we've got 1, 2, and then we had an up month. Back here on 2018 as well, 1, 2, 3, 4, 5 down months in a row. So that was quite a tough economic period. Hit that low Bollinger Band on the monthly and then started coming back up. Generally speaking, we don't see too many down months in a row. However, so that could mean that we might come back up. However, it could mean it's part of a bigger movement down. So it's just good for perspective, having a look at what the market is giving us. Now, we've tapped the weekly lows twice, and often that can be a good sign that we're looking to once again buy into the market. So we've tapped it here, we kind of came back up, tapped it here, we're now higher. So we'll see what this week brings. On the daily, nothing too really stand out. We've had a couple of green days. We'll see what actually happens today. Nothing particular on the daily that I'm interested in. Perhaps some support around the low. If we come down, we might sort of see some buying based on just the pricing alone, but that's not really that much to go off. Have a look at the 4 hour. Bollinger Bands up around these highs up here. So we'd have to see a really strong buy before we come back down. We'll break through that close. So be looking at the 4 hour Bollinger Band when the market's live, if we do get up to these highs. However, if we do break below these lows and we get to the S2, the Bollinger Band on the 4 hour may come into play here as well. Having a look at the 1 hour Bollinger Band on the low. So if we come down, tap that, that could be a potential reason for other traders to start looking to get long. Also remembering that you've got the 4 hour even lower. So always be aware the market can shoot through where you're expecting it. It's always good to be safe. 15-minute, even just these levels here will break the Bollinger Band. Quick check of the 30. 30 is not really significant. It's kind of right in the middle of everything. Hopefully that will spread out so we can get a bit of momentum and get up to the close without breaching it too much. And the 5-minute. Looks like the Bollinger Band has really tightened up. So if we do get a nice push at the open, could be a really good indication that we might have an opportunity to get long off the S1 or the breakout short. Just remembering that the potential for it to go right down to the low before it rejects could be reasonably significant. Before I go and look at the volumes, I do just want to have a quick look at previous days of trade. So a bit of a recap. You can skip forward if you don't care about the recap, but it's good to remember what has happened previously with the levels, just to build a bit of trust in what they're all about. So we had a rejection in the pre-market off the pivot on Friday. Very kind of messy trading. It really went up through everything and breached the highs of the previous day, came back down, hit the breakout long, came up, found some rejection points off the R2, but you would have had to take a little bit of heat there on pretty much a double top before crashing right down. So this is kind of into the US session, right down to the previous day's low, tested it a few times, came right back up to the previous day's high, down to low again, and right up through the R3. Very choppy and very erratic trading, so not the best kind of accessible day, but it's good to be aware of what can happen. On the Thursday, we tapped the pivot. This is in the German open period. I'll just bring up the time just to double check. So around the open, about half an hour in, 40 minutes in, had a really nice buy. Then we started to see on the volume some selling coming in around these previous highs here for the pre-market, and that sort of pushed the market right back down. We stayed within that range between the pivot and the previous day's high for that day. Not a bad trading day, that one. Not perfect, but not a bad one. Go back to the Wednesday. Excellent trade on the Wednesday. So we've got an S2. We rejected off that. Just check the time. It was around 10:35, so 10:30 could have got in. Now that came down, pushed off this outer level, the S2, and went right up through the pivot. So could have been a really good buying opportunity, because if we look at the weekly chart, we'll notice that last week we did breach the weekly Bollinger, and that was in the Wednesday trading. We'll have a quick look at the daily. Nothing spectacular on the daily for that reference. However, I believe the 4 hour we did breach. So where are we? Friday, Thursday, Wednesday. So now the Bollinger Band, it didn't come down, but basically it looks like a really good candle. You know, we kind of came down, tapped it, and obviously it could have kept coming down further, but that is the S2, which if you were looking for buy opportunities, really good position to get in. And if you're watching that footprint, which we'll talk about shortly, can give you an extra edge over the market. So I'll just scroll back to the front and we'll come back. So Friday, Thursday, Wednesday, Tuesday came close to the breakout short in the pre-market and basically just rose into the close. Now there was a lot of buying coming in that we could see, so there was opportunity to get long if you were confident that we were going to touch the gap. As you can see, we've kind of touched that gap and it faded right back down to where it came from. So a good potential buy at the open, watching the volume, and then a potential fade the gap. However, it could have always just kept going long. So this is where the footprint really comes in. You can't really tell what's going to happen based on this price action as such, but when it comes to a volume footprint, who's buying, who's selling, what kind of interactions there are, it can really give you a deeper insight into what you're looking for. And then Monday, so first day of the month, first day of the quarter, sorry. I'll just bring up the time again. Opened here, pushed right up to the R1 before selling, and it just came right down below the S3. So amazing selling opportunity. The only concern, so that was around the 10:30 mark, you could have got in half an hour after the DAX open. The only thing with this one is often you'll see a lot of buying coming in on the first day of the quarter, which we did see, so we pushed up. However, sometimes because it's the start of a new quarter, funds are going into the market, they're buying up everything and they can push it beyond your levels. So you just got to be careful on the first day of a new quarter that you're not sort of shorting something that's just going to keep buying. So I was a bit where I did do a short on the Apex accounts that I have, and I got out fairly soon. I kind of didn't want to ride it out too long, but those who did would have done very well out of it. Now, that was last week, so plenty of opportunity, except for Friday was very choppy trading. I didn't do very well on the Friday. The other days were quite successful though, so that's great. Now, jumping over to the Tradovate platform. So I'm just taking a quick look at the Tradovate platform here. I've got the market profile set up. And what we're looking for is the really long market profile price points. So we've got here, go one tick up, 15,400 or slightly lower. We've got a lot of volume coming through at that price. So on the futures, this is different pricing, but remember the positioning of where the market turns around is basically the same point, just different pricing. So it's kind of like it's been transposed. Now we've got big volume here, and then here. So if we kind of bring it all together, I'll just try and see where the market might want to track towards and repel off. So we've got about kind of 60 points down. We've got a lot of volume down here based off these lows. The 15,345 seems to have a bit of traction there on multiple days as well. And then getting beyond that, we're getting quite high up. So I'm not sure if we'll go that high up. So we'll be looking at these prices here, the 15,400, 15,345, and down here at the 15,192. Unfortunately, that's a bit below the screen, but I'll just try and pull that up. So see down the bottom there where there's longer orange horizontal strips. So that kind of pricing that we're looking for. And so when you're watching the market, obviously you can use your CFD account, that kind of thing. However, it's really important to be watching the order flow. So you've got the depth of market, you've got the time and sales, and then the footprint of the bid and the ask to see who's buying, who's selling, and at what price points. And that can be a very valuable tool to determine whether the point is going to hold or it's going to break on through. That's it from me today, guys. I hope you enjoyed. Like and subscribe. Send any comments through if you have any questions, and good luck with your trading.